We in here?
Yep.
Let me refresh my page.
Hello, hello.
I think it's feedback. Kind of crazy.
You can hear it, right?
You hear it?
Yeah, when I turn my thing up.
Worst case scenario, we gonna just jump in the same on the same computer.
Hello, hello, everyone. Just waiting for a few more people to join.
You muted your mic. Turn back. Do one more time. Let me see if I mute my mic. Does it go down? My mic's muted. That's cool too. So you're muted right now? I'm muted. So you want to start? Just mute and unmute.
All right, everybody, thank you for joining. I'm going to get started. So we're on Facebook, so most of you probably know me. My name is Shantae. I'm a real estate agent, and I wanted to do this, I guess, seminar or whatever with Jelani because I think there's a lot of misconceptions in the community about how to utilize credit and home ownership. So I wanted to give people the opportunity to hear from a credit expert on how you can leverage credit the proper way. I think, we all get credit cards. We use them, but most time we use them, we build debt, and it's not, you don't have proper credit card utilization. So Jelani is going to talk about some of that stuff. But before we get into all the fun ways that you can use credit, I'm going to briefly talk about how credit impacts you when you are trying to buy a home. So credit plays a role in the pre-approval process. For those who don't know what a pre-approval is, it's what lenders give you to say, hey, this is how much house you can afford. When taking into account for your credit, higher credit will determine a lower interest rate. So interest is how much the loan accrues during the time you have the loan. And it also allows you to have more program options for the different type of programs you can qualify, because there's a ton of different mortgage programs. Lower credit, you're going to have a higher rate and fewer program options. So low credit, on top of giving you less options, it's also going to make your mortgage way more expensive, because you're going to be considered a risk to the bank. So when you have higher credit, they're going to look at you as less risky. Therefore, it's going to make your mortgage more affordable. When you have low credit, they're going to consider you a risk, and this is going to impact how much mortgage you pay on the house that you buy. So you can literally save hundreds to thousands of dollars over the year just by having a better credit score. Now, it's not to say you can't get a mortgage with a low credit score. For example, FHA, you can get a loan with them with a credit score of about 580, but those loans tend to be very expensive and they're very difficult to close on, versus having a credit score of 640. You can really start to take advantage of affordable mortgage options. So there's a difference between being able to get a mortgage and being able to get an affordable mortgage. So with that being said, that is my little spiel about how credit affects you being able to get a mortgage. And then I'll just briefly touch on how you can utilize a home once you actually buy. So there's a term that you may have heard before. It's called house hacking. And essentially, house hacking is utilizing a property that you own to help create revenue. So you can do this with a single family. Some people buy a single family, rent out rooms. Some people buy a single family that has extra basement space and convert that and use that as another way to make income. Obviously, one of the best ways to do it is through a multifamily. You can rent one of the units if you have a two-family, or rent two of the units, live in the third. So those are a couple of ways that you can utilize a home to bring in income or significantly decrease the amount of mortgage that you have to pay to live in the home. And then over the years, once you build a little bit of equity in your new home, some things you can do is get a home equity line of credit, which is essentially using the money that you have put into a home. You can pull it out and actually use it to purchase a second property, which is what a lot of people do. So it can be a rental property, second home, vacation home, or you can use it for other things, but I would suggest using it to buy more property. Yeah, that's basically it. And then obviously you can Airbnb any property that you own. But the point of today is really for you guys to get some information for Jelani about how you can improve your credit, how you can leverage your credit, and really the power of credit. So I'm going to hand it over to him.
Thank you. Can you hear me? I see somebody put in the comments that they couldn't hear me. Can you hear me well? Okay, perfect. What's going on, everybody? Thank you for tuning in. Thank you for Shante. Thank you, Shante, for inviting me to come up and do this. I appreciate the support that you have been giving me, but I appreciate our relationship as far as entrepreneurship goes. I think it's very important to have. I see somebody, Davina. Davina, can you hear? Yes. Okay. Cool. I appreciate the relationship that we have as entrepreneurs, and I just look forward to keep growing. So my name is Jelani. I'm a credit expert. I'm the founder of Ambition of the City Credit Repair and Financial Education. What we focus on mainly is helping people build, restore, and repair their credit. So it's extremely important for me to work with like-minded entrepreneurs and people who are in the real estate space to help people get their credit in order. So we help people repair, rebuild, and restore their credit. We also help business owners establish business credit, which is something that's separate from your personal credit, right? And we also teach people how to leverage their credit, right? Leverage their credit into different opportunities, whether that be into rental properties, whether that be into other business ventures. We also teach people how to develop the proper relationships that they need with certain banks, right? So we help people do all these things with the mindset and with the importance of all that we do is to help people build wealth, be free, and give back, right? That's our model at Ambition of the City: build wealth, be free, and give back. With those three principles, we believe that wealth comes from not just financial, it comes from the physical wealth, right? The physical wealth, the spiritual wealth, the mental wealth, and then of course that translates into the financial wealth, and then being free. The way in which we define freedom is we tell people that, to be able to do what you want, when you want, with who you want, of course, without hurting anybody, right? That's true freedom, right? If I want to go somewhere, if I want to take a trip, if I want to spend time with my loved ones, I can without having to worry about anything financially, right? Next is just the give back. The give back is being able to, share information, to share your time and your resources with the people that you love, with your community, right? So that's extremely important. Sharing information could be simple things like this: getting on live and sharing what you know, with the hopes of inspiring or the hopes of giving somebody some valuable information that they can then in turn use, right? And that's what we're here to do today. So with that being said, I'm going to get into a little bit about what it takes, what the proper credit report, what your credit report needs to look like in order for you to be in a lendable position, right? So when I say lendable, that just means you looking on paper, you looking lendable to a bank for whatever that may be, whether that be an auto loan, whether that be a home loan, whether that be for you to get certain credit cards, right? So I'm gonna get a little bit into that. So the first thing I want to break down for people: when they have credit, a lot of people have credit cards. A lot of people, they may not have credit cards, or they may have looked at their credit score and they don't necessarily understand why their credit score is where it's at. They want to know how they can improve their scores. So before we get to that, I want to break down, what makes up your credit report, right? So there's 5 things that make up your credit score. Excuse me, not your credit report, your credit score. There's 5 factors that make up your credit score. Those 5 factors, right? You have to pay attention to these, because this is how you're going to be able to know what your credit report, what your credit score is going to need to improve, right? So the first factor of your credit report, when you have credit established already, right? I'm going to also get into, how you establish credit when you don't have any credit. I'm going to get into that as well. But this conversation right now is for people who, may already have a couple credit cards, student loans, different things that they have already used their credit card, their social security number to open up certain accounts, right? So the 5 things: payment history, right? Payment history is one of the most important factors on your credits that impact your credit score. So without good payment history, your score can take a hit, like an entire hit. And you want to be sure that when you have a credit card, or when you have a loan or anything like that, you never let it go over 30 days without you making that payment on time. Because this is the thing: when you have a payment and it's due on the 15th and you paid on the 16th or the 17th, you may still get may get a late fee, right? But that doesn't necessarily mean that it's going to report to the credit bureaus as late, right? And when I say the credit bureaus, I'm talking about Equifax, Experian, and TransUnion. Equifax, Experian, and TransUnion are the 3 main, right? The 3 main consumer reporting agencies that collect your data, right? That collect your data, and they use that information to give you a credit score, right? They give you a credit score, and they determine how lendable you are to banks, and banks use that data to make their decisions, to make their lending decisions. So your payment history is extremely important. I don't want to get off topic because I do want to talk a little bit about the bureaus. I'm going to say this one thing: the credit bureaus, Equifax, Experian, and TransUnion, they are private. They are private companies that anybody could start. Me and you could start a consumer reporting agency right now and collect data. So they're not a government agency. People sometimes they think Equifax, TransUnion has some type of power, but they're not even government agencies. They're just companies that literally make money off of collecting your data. Simple as that, right? They make money off of collecting your data and selling it and getting paid to basically report your information, right? Banks, different lenders, they pay TransUnion, Equifax, and Experian. They pay them to submit certain information. So Equifax, Experian, and TransUnion are companies that literally just eat off of your data, which I'll get into it a little bit later, but it's damn near illegal, right? For them to collect your information and just report it to anybody. They're stealing your information essentially. But let's get back to payment history. Payment history is the most important factor, period. I tell people like this: in order to avoid late payments, what you should do is you want to set up automatic payments on everything. Even if, and I tell people, even if you don't have the money, right, still set up automatic payments. Why? Why? People say, yo, why would you have automatic payments if you know sometimes you may not have the money? Because look, if you have automatic payments set up, right? If you have automatic payments set up and they go and try to pull the money out your account and for some reason the money's not there, right? And they give you a late fee or a late payment, you can always go back on the phone and say, hey, look, the money was in my account, right? I have my late payment set up. I mean, I have automatic payment set up, and the late payment and the payment the money was there, right? They really can't argue with you too much. That's a glitch in their system. So when you go to dispute that late fee, that late charge, you say, hey, my payments were set up every month. You guys been doing it for the past 3 months. I don't know what you guys did wrong this time, but the money was there, right? Opposed to if you don't have automatic payment set up and you get a late payment, it was always going to be your fault because it's on you to manually go and do that, right? It's for you to manually go and do that. So you want to make sure that you always have automatic payment set up. It's extremely, extremely important. With that being said, the next factor of your credit is utilization, right? Utilization is extremely important. How much money do you owe? What's your utilization? How much money do you owe on your credit cards, right? Utilization is 30% of your credit. So I tell people, when people come to me and they have, bad credit and they have credit cards, but the credit cards are overutilized, I tell them that the fastest way for you to get your credit score up is for you to pay down your credit cards. Pay down your credit cards because utilization is 30%. It factors into your credit highly. The next is the length of history. How long have you had credit? If you've had credit for, a certain amount of time, it weighs better if you had credit for a short amount of time. So the longer you've had credit, the better you look in the eyes of lenders, right? Next would be the amount of inquiries, right? The amount of inquiries you have. So how many times have you ran your credit? How many times have you gone to a car dealership or gone and applied for a mortgage, anything like that? Anything that you can get an inquiry for. Did you open up a new Macy's card? Inquiries play a factor in your credit. They're not that important, right? But they do play a factor in your credit. How many times have somebody actually ran your social security number and actually pulled your credit? An inquiry, that's 10%. And then in the final piece of your credit score, what it's made up of is the type of credit that you have, right? So there's two types of credit. There's installment. Installment credit is a car loan, a mortgage, right? Things like that, or a personal loan. That's all installment. The next is revolving credit, right? Revolving credit is a credit card, right? So when you're going to get a mortgage, they look at, hey, what kind of credit does this person have? You have to understand this one thing. I want whoever's watching to understand this. When you are applying for a car, applying for a mortgage, just because you have a high score, like you have a 760 score, 720 score, just because you have a high score doesn't necessarily mean that you will get approved for something, right? It doesn't always make you lendable because you have a high score. You can have a high score off of just having one credit card, right? But does you having one credit card really determine how lendable you are or how good your habits are when it comes to managing credit? No, because all you have is that one credit card, opposed to somebody who has a 670 or a 680 score who has managed a car loan. They manage multiple credit cards. They've had a school loan that they make on-time payments with, right? So when you look at it from that perspective, you have to understand that it's not always just about your score. It's not always just about your score. It's about the way in which you use credit, the type of accounts that you have experience managing. Because if I'm giving you my money, I don't care if you manage the credit card. I'm giving you $50,000. Why do I care about you managing a $500 credit card? Right? I want to see your mixture of credit. I want to see how good you are managing money. Right? So, with that being said, those are the 5 factors that make up your credit score. Let's run it down one more time. Payment history, don't be late. And like I said, set up automatic payments. I don't care if the money's there or not, because if they try to pull the money and the money's not there, you're gonna call them and say, hey, look, I just got paid yesterday. The money's in there. I don't know what's going on with your system. I paid on time last month and the month before that and the month before that. I don't know. There must be a glitch in your system. I need that removed. Thank you. Right? Let me know when you finish. Or send me a confirmation email when you remove that late payment. Right? You want to have that conversation. Always set up automatic payments on everything. On every credit card you have, on anything that you have, set up automatic payments, because the burden of proof is going to be on them, not on you. Right? Next, utilization. Keep your cards low. They say below 30%. That's cute. Try to keep them below 10% if you can. Right? Because that shows that you really, because it's crazy, right? So the way the credit system works is they want to give people money who don't need their money, which is so weird, but that's really what it is. They want to see how much do you not need us? If you need us too much, then I don't think you're lendable. You're not gonna pay back. You need too much money from us. It's such a weird system, but that's really how they look at it. If you need too much money from them, they don't want to lend you. But if you seem like somebody who doesn't need their money, they're more willing to lend to you, right? Because it indicates that you have good consumer habits, spending habits, right? So those are the five factors that make up your credit. Payment history, utilization, how long have you had credit? I know you guys probably see on social media that the people say, hey, if you put your child or somebody on your credit card that you had for a long time, your child could come out, with guns blazing with a 720 score or 760 score. It's true, right? There are cards that you can put your child on as young as 16 and 18 years old, right? And you can start them off with good credit by adding them as an authorized user on your credit card, right? So they may not be able to just go and get a property though. Why? Because of what I said earlier, all they got is one credit card and they're authorized user, right? This isn't even their primary account. This is just their authorized user account. So what they would have to do is they would have to still go out and get their own credit, go out and get their own car loan, go out and get their own stuff based off of, utilizing their score that you gave them, right? They still have to stand on their own 2 feet. The way lenders look at it, when they see you as an authorized user, they're looking at it like, okay, you're an authorized user, but how do you stand on your own feet? Right? Not just living off of your daddy's credit or your mommy's credit. That's cool and all. You got responsible parents that put you on, but how are you going to manage credit now? Right? So I might not lend to you just because you're an authorized user with a 740 score. You understand? So you have to understand that length of history is extremely important. And then, like I said, the mixture of credit, and then inquiries. How many times have you ran your credit and things of that nature, right? Those are the factors that make up your credit score. When you understand how to manipulate those 5 factors, you'll understand how you can become lendable, right? And put yourself in a lendable position, whether that be for a car, whether that be for a mortgage. Understood? So breaking that part down, I hope that gives you just a better understanding of how it works. And that's like I said, those simple 5 factors, as simple as they may seem, they're the foundation, right? They're the foundation of good credit. But I'm gonna see if Tate got anything to add right now, and I don't wanna talk too much. Go ahead.
I don't have anything to add right now. I did want to say I noticed that in the first couple of minutes when I was talking on your live, I had the mic muted. And I can't see your comments. So if you guys are leaving comments for me, Jelani, you're going to have to read them to me. Or feel free, if I don't have you as a friend already, to add me and send me any questions you have about the home ownership process. I can go into more detail about how credit plays a role and then the other factors that contribute to buying a house. But the point of me having you on today was really just so you could spread the knowledge you have about credit. I really want people to feel empowered about that. If you guys, like I said, have questions about home ownership, you can hit me up anytime, but you are my guest, so I want you to rock out. I'm taking notes. I'm putting things in the chat. So if you guys miss anything, we'll definitely do a recap and all that stuff, but I want, this is your show today.
I appreciate it. So let me run it back. So we went over the 5 factors that impact your credit. Cool. right? So next thing I want to really get into is I want to get into, and this is one thing that, you know, I want to kind of pull back I want to take the veil off of the credit industry completely, right? You have to understand that this SHIT, and I don't want to swear because I don't know who's watching, right? This stuff is made up, right? 100%. The credit score is literally made up. It's made up and it's made to control a part of your life, right? And when enough people follow it, when enough people accept something, it becomes law. That's just the truth. When enough people accept something, it becomes law. And we have all accepted the credit system as a way in which we are judged financially, what our consumer habits look like, right? We accepted it. So they're able to make decisions based off of the fact that we accepted that, right? So with that being said, you have to know and understand that it's really a made-up system, right? And Equifax, TransUnion, and these other these other consumer reporting agencies, they're literally just companies that make a ton of money off of collecting your data illegally, right? And they use this to make lending decisions. They use this to furnish information, right? Furnish information to banks, and they make the lending decisions. They can determine, you know, how you move up in life, right? So when you understand that, I want you to understand that any system like that has flaws in it, right? That's where I'm getting at. Any system that is just made up, any system has flaws in it. Any man-made system is going to have flaws, as simple as that. Whether that be the school system, whether that be the judicial system, whatever system you can think of has flaws in it because it's all man-made. It's the same as the credit system, right? The credit system has flaws, and there have been laws set in place to correct those flaws, right? To protect people who are going to be impacted by the flaws in those systems, right? So when you understand that, what I'm trying to get across is the fact that you as a consumer, right? You as a consumer, somebody that has a credit score, somebody that's living within this system, right? You have rights as a consumer that govern, right? You have rights and there are laws that govern how information is reported about you, right? And there has been laws enacted that literally govern the credit repair space and the credit space, right? So the first law that was enacted by Congress, it was a law enacted by Congress, 15 USC 1681, right? 15 USC 1681, the Fair Credit Reporting Act. The Fair Credit Reporting Act is the act that governs how your information is supposed to report or is allowed to report, right? Allowed to report on your credit report. So it's a certain way it's supposed to look. It's a certain way it's supposed to report. Also, you have to understand that these credit reporting agencies, Equifax, TransUnion, and Experian, they assume this role, right? They assume this role. Literally, they assume the role of the credit reporting agencies. This is not something that you have to subscribe to. Literally, you can opt out, right? You can opt out of their system, right? So the reason why the Fair Credit Reporting Act was enacted, right? Congress, the U.S. Congress, they found something wrong with the credit bureaus, right? Accuracy is a measure of value, right? Accuracy is a measure of value. Inaccuracy equals no value. So what happens is there's a ton of inaccurate information on your credit report, right? That's not reporting accurately. That's not reporting fairly. The Fair Credit Reporting Act, right? There's information that's not reporting fairly, right? So when you understand that, you want to understand that you have rights, right? It's not just they supply information that can affect your life and you can't do anything about it, right? You can't do anything about it. You have to take control of the information that is being reported on your credit report. You have to take back your power as a consumer. And when you understand your power as a consumer, and one of the laws that I just mentioned being the Fair Credit Reporting Act, 15 USC 1681, you can look it up, you can Google it, you can download a copy of it, you can study it, you can start implementing the information to understand your rights better. When you start to take that information in, you understand that you have power. Also, there's more. laws put in place by Congress to protect you as a consumer. And the next one is the 15 USC 1691, right? The Fair Debt Collection Practices Act. This is to protect you from deceptive collection practices. I can't stress enough how criminal debt collectors are, right? I'm going to be, and this is not knocking anybody that's been in prison, my brothers that have been in jail, but a lot of collection agencies are literally ran by people who just came home from prison. It's a fact. The majority of collection agencies in America are started by people who just came home from prison, who have criminal records, right? And that's not knocking anybody with a criminal record. I got a criminal record. But what happens is these people understand that, all right, there's a lapse in information. There are a ton of people out there who don't know their rights as consumers, who are going to allow me to call them at any time of the day and scare them about a debt that they owed 5, 6, 7 years ago, right? And they're gonna give me their bank account information, and they're gonna pay me set amount of money because they don't know their rights as consumers, right? You never entered into any contract with that debt collection company. What debt collection companies do is they literally go out and they buy something called paper, right? Paper in the debt collection industry is just a list, right, of names, account numbers, information, addresses, and how much debt there is, right? Literally, right? And what happens is these people, they buy this paper, they set up little debt collection agencies, they might set up an office somewhere, and they start making phone calls and saying, hey, Shantae, we're calling to collect. You owe Capital One $700 or $1,000, $1,500, whatever it is. How do you want to start making payments so we can clear this up? And if you don't know any better, you're gonna be like, oh my God, you're right. I do owe them that much money. How can I start making payments? Oh, we can collect your bank account information. You can send us a payment through check, however you want to do it. Immediately they got you on the hook because you just admitted to the debt, right? They have you 9 times out of 10. They have you recorded. So they're literally deceptive practices that they go by. According to the Fair Debt Collection Practices Act, they're not even supposed to call you when it's inconvenient for you. They're not supposed to call you when they're not supposed to inconvenience you when they call you. And to be honest with you, anytime they call you is an inconvenience. But according to the law, they're not supposed to call you when it's an inconvenience. It's a fact, right? And they can be charged $1,000 per violation of them inconveniencing you, right? But I'm not going to get too deep into the law. You can literally download the Fair Debt Collection Practices Act and learn more about the consumer protection laws that protect you from these unfair and deceptive practices, right? So with that being said, this is how credit repair works. Credit repair works only based off the law, right? There are no secret sauce or secrets or whatever the heck you want to call it. You see people online talking about, we got secrets on how you can do this and do that. No, the law is how credit repair works, right? When you see inaccurate information, because according to the Fair Credit Reporting Act, all information on your credit report has to be 100% accurate and 100% verifiable. And if it's not, it should be removed from your credit report, right? If I see something on my credit report where Equifax says that I owe $500 on this account, and then TransUnion says I owe $700, and then over here it says I owe $800, but they all saying this is the same account. Is that accurate? Absolutely not. So that information should be removed from my account per FCRA violation, right? And that's how we get removal for our clients, by implementing a law, right? Is it an overnight process? Is it a 30-day process? Absolutely not. If it was, everybody would be doing it. You have to understand this. Credit bureaus make more money off of negative information, right? So the more negative information they have reported on consumers, the more money they make. Banks pay more money, right? They pay more money for negative information. So for instance, when you go to a bank for a loan, when you go to the bank for an auto loan or anything like that, when you go to a bank and they say, hey, they run your credit, right? And you have a low score, right? That bank could charge you more in what? They could charge you more in interest. So negative information They got that information from Equifax, Experian, and TransUnion. That's where they got the information from. They had to pay them for that information because Equifax, TransUnion, and Experian are the ones that are housing that information. So when you go to the bank and you run your credit, they get your credit report. They get your credit information from them, TransUnion. They pay more for bad information. So it is in Equifax, Experian, and TransUnion best interest to house as much negative information as they possibly can. So you think they're going to make it easy for you to get negative information removed off your credit report when they can charge more for it? No, it's not good business, right? It's not good business. So when you understand that this is just a business, and from that standpoint, from that perspective, they're going to house as much negative information as they possibly can on consumers. As long as you don't know your rights and know that you can dispute information, that you can get negative information removed, that you have and that your rights are being violated. As long as you don't understand that, and of course it's millions and millions of people that don't understand that, right? So 10, 15, 20, 30, 1,000 people knowing their rights doesn't do anything to the Equifax and these other consumer reporting agents. They're still going to eat. They're still going to make money. Who cares if 1,000 people know their rights? Who cares if 20,000 people know their rights? We got 6, 7, 10, 15, 20 million people who don't, right? So when you go to a bank and and they're lending to you, the money that you're getting loaned is gonna cost more in interest when you have a low credit score, right? Therefore, your information costs more, right? Your information costs more. So when you understand this credit system and you understand that this is just a charade, right? And you understand that there's laws in place to unmask that charade, then you should understand your power just a little bit more. You should understand that as a consumer, you can dispute anything on your credit report. You can dispute anything on your credit report. You have that right to dispute anything on your credit report. And they have to be able to supply on how they verified that information, how that information got on your report, right? So you have rights as a consumer. Don't just think that you just have a bad credit score and there's nothing you can do about it. You can either hire someone, right, to do something about it, or you can learn how to do something about it yourself. And I recommend learning how to do something about it yourself. The Fair Credit Reporting Act, Google it. The Fair Debt Collection Practices Act, Google it, right? Use the law, read the law, study the law, and then figure out where they violated at. Where did they violate my rights at? Did they call me at an inconvenient time? And remember, who determines what's an inconvenient time? If you call me at 10 o'clock, it's inconvenient. I don't want you calling me at 10 o'clock. It's inconvenient for me. You violated my rights per the Fair Debt Collection Practices Act. You violated my rights. With that being said, remove this collection off my account, right? I don't even know where this collection account came from. Tell me where it came from. Can you validate this information? If you can't validate this information, get it off my credit report, right? Of course, there's more verbiage that goes into it, right? But that's really it in a nutshell in terms of how you get collections removed. Medical collections too. Medical collections, you have to understand that if you have a medical collection on your credit report, the fact that your medical information was reported to a third party is a violation of HIPAA, right? There are HIPAA laws that literally say, hey, you're not supposed to share people's information, people's medical information. You sharing my debt is still sharing my medical information, right? Yeah, you didn't share the details of why I was in the hospital. I get that, but you can still get items removed by pressing them on the HIPAA law with collections. Who are you reporting my personal information to? That's my personal medical information. That's a violation of my rights, right? So what I'm trying to get at, like I said, I'm going to reiterate this, is you have power as a consumer. Simple as that. You have power as a consumer, but you have to know and you have to study the law. Am I expecting anybody to really just, study everything and study the law? No, but you at least have a good understanding of it. Know where to look, right? What you don't know will hurt you. Simple as that. What you don't know will hurt you. You as a person, as an individual, as a consumer, you have rights. And that's how credit repair works. For our clients, what we do is we challenge the credit bureaus, we challenge collection agencies by imposing the law. Nothing else. There's no secrets. There's nothing that we're writing that's fancy. Law. Law, 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 law. That's it. Follow the law or we're going to sue you. Simple as that. Right? Another thing, there's something called the CFPB, the Consumer Financial Protection Bureau. The Consumer Financial Protection Bureau is where you, as a consumer, you are an agent. You're an agent of the Consumer Financial Protection Bureau because you're a consumer, right? Financial Protection Bureau. Who's the agents of that? Consumers, right? The Federal Bureau of Investigation. Who's the agents of that? Federal agents, right? So the Consumer Financial Protection Bureau, you as a consumer are the one who does the reporting. So literally you can go on the Consumer Financial Protection Bureau website and you can file complaints against companies who have used deceptive practices, and you can impose, right? You can impose the law on these companies that are using deceptive practices. Once you find a violation, you can go on the CFPB and you can dispute information. And you can tell them, hey, I've been violated, right, by said company, and this is the remedy that I want, right? So that's a little bit about consumer financial protection. That's a little bit about, you know, your power as a consumer. We got into, you know, how to look at your credit report, how to break it down based on the 5 factors that I gave you earlier. Next thing we're going to talk about, we're just going to get into a little bit about leveraging your credit, right? What happens when you have good credit? What can you do with good credit, right? Most people just think about, you know, buying homes, buying cars, which is cool. That's something that you want to do, but you also want to understand that you can leverage your credit into business opportunities. That's extremely important, right? Knowing that you have access to money to be able to invest, right? You can use your good credit and you can literally technically become your own lender in a sense, right? So look, this is how it works. I have good credit, right? I have a credit card that has $25,000 on it. I have another credit card that has a $10,000 limit. I have another credit card that has another $10,000 limit. Essentially, I have $45,000 in available credit now, right? I see an investment. I don't know. It could be anything. I might want to start flipping cars. I might want to start an online shop, an online store. I might want to do anything. The fact that you have credit available is going to allow you to be able to utilize OPM, other people's money, right? Take that money and invest in yourself without ever having to touch your own money, right? Without ever having to touch your own money, you can use your credit to start a business, right? Once you do that, all you have to do with the investment is just make more money, right? Make more money, then you have to pay back your credit. What does that mean? So if in order for me to make the minimum payments or the payments on this credit card, right, that I pulled the money from, right, the credit card I pulled the money from, if it's $36 a month to repay this, it was $36 a month to repay this credit card, and I'm making $500 a month off of that money, you're winning. See, what happens is we get taught that having debt is like some freaking monster, right? When you have to understand that the top companies in the world, the biggest businesses in the world, they got there by leveraging debt. You can't get around being financially successful. You really can't get around leveraging debt or knowing how to leverage debt. That's how you get ahead. Leveraging debt. If I have $10,000 in debt, right? But with that $10,000, I bought an asset, or I have a business that's bringing me in $20,000 a month, right? I'm doing all right, right? I'm doing all right. And it only cost me, on that $10,000, say it only cost me $300, $400 to service that debt. When I say service that debt, I mean paying that debt on a monthly basis, right? What if it only cost me that much money to service that debt, but I'm making a ton of money? I'm okay with having $10,000 in debt. See, once we understand that once we have good credit, we can leverage our credit cards. We can use our credit cards to start businesses, right? We can use our credit card to start businesses. You can get money off your credit cards. There's a couple of different ways you can get money off your credit cards. You can do a cash advance. That's the easiest way that most people know, right? But there are other strategies as well, right? That you can get money off your credit card, and that's what I teach people in my business credit course. Is I teach people how to get money off their credit cards. I won't get into that right now because it's kind of, it's too much. But that's something that you can definitely start to understand, is that you can take money off your credit cards and you can leverage that into opportunities and make money, right? So it's a simple concept. Leverage somebody else's money so you don't have to tap into what's in your personal bank account, and then you'll be all right. You have to understand that if I take $5,000 off a credit card, I need to make sure that that money is being put into an investment. You're not just taking that money off to go buy sneakers or buy clothes or buy whatever it is. You're going to take that to really invest in a business, right? I have people that I know that they take $5,000 off a credit card. They go and they buy a car, right? They go and buy a car for $3,500 and they flip the car for $7,000. They take that money, they start paying back their credit card, but essentially that's how they got their ball rolling. Now they're flipping cars. Now they have a dealership, right? Off of credit, and they never touch their personal money, right? They never touch their personal money, right? So once you start understanding credit in the way in which you can use it to leverage somebody else's money to make you money, honestly, the world becomes your oyster, straight up. Like there's nothing that limits you when you understand how you can utilize credit, right? There are ways in which you can get up to $250,000 in credit on a personal side and on a business side, right? There are ways that you can do that. When you have access to money, what's the difference between? There's no difference between me. For me, once you understand credit, there's no difference between me having $250,000 in cash, like personal cash, and me having $250,000 in credit. There's no difference to me. It's no difference. Why? Because you know how to leverage it. I can go and take, I don't know, out of that $250,000 I have in available credit, I could take $50,000 from it and go do something, go buy a property somewhere out of state. I don't know, right? You can do whatever you want with it. Just create cash flow. Use your credit. You can use your credit to create cash flow. As simple as that. But I want to open it up for questions on, how to build your credit, how to leverage your credit, whatever questions you may have. Go ahead, ask them in the chat, and I'll be glad to get some answers for you. But I appreciate you guys listening. This is going to be the first of many conversations we have around credit and just leveraging your credit into opportunities. We're going to be talking more about it because we are a community that is in need of financial literacy and financial education. And I don't know it all. I don't know it all, right? I don't know it all, but I'm going to take my time to learn as much as I can and share it with the people that I love, the community that I love, because it's important. I feel like a lot of our issues that we face, they stem from a lack of financial education, right? They stem from, like I tell people all the time, like me personally, if I have enough money to send my kids to a private school, that's what I'm going to do, right? When I went to public schools, I ain't learned jack shit, straight up. So if my parents had more control of their time, more control of their finances, they may have enough funds to send me somewhere where I could actually learn. You understand? So when you look at it like that, you understand that almost every problem comes back down to the finances. So we got to get straight financially. It's important. It's critical. It's like how much people say, oh, but people in the community, they need more than just money. They need therapy. Therapy costs money. You need access. You need access to resources. Who's giving you therapy for free? Oh, we need access to healthy foods. That's more important than money. Healthy food costs money. So when you understand that, man, almost everything comes back down to how we are and how we are able to leverage our resources and have access to resources. So with that being said, open it up for questions. I can go all night, but we're not going to go all night. But I appreciate whoever is listening right now. You got any questions down there? You got any questions on your end?
I do not.
Okay. It's all good. We're gonna get tighter with our lives.
Yeah, we have to figure out get in a studio, do a little podcast setting so we can be on.
Right. We got to get tighter with it. And when we do, we'll be all right.
Well, I would say if no one has any questions, we can wrap it up. We'll definitely do a
Absolutely.
recap video, and then we'll definitely plan another time to do another one of these, see what the people want to hear about.
Absolutely.
All right. Well,
Absolutely.
thank you everybody that joined, and thank you for tuning in. Again, if you have questions about credit, feel free to hit up Jelani. If you have questions about buying a home, you already know to hit me up. And again, thank you, and everyone have a great night.
All right.